The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. I don't promote my membership that often, but I do have a membership where I look at the SPY on a daily basis, and I'll give you guys an update on the chart. And also, there's a bunch of other benefits of becoming members, such as weekly Bitcoin analysis and specific stock request, individual stock requests by members every Thursday. So if you guys are interested in that, I have the link in the description below and in the comments. So let's take a look at the daily chart for the SPY. So first we're going to take a look at the daily chart and look at the micro structures, and then we look at the macro structure on the weekly chart. So basically, SPY got rejected from the 416 level because there is this resistance, and we just had a breakout of the 410 level. Prices cannot exceed it. We sold off. So this does look like a little top or a topping pattern, so we could see lower prices. But maybe next week we'll probably get a bounce, and I'll go over the reasons why. So let's take a look at this structure right here. So looks like this was the range pattern. You can see how well prices are respecting it. Let's go ahead and make this one yellow. So prices were range bound right over here. We broke outside. Most breakouts will fail. We came back inside the range. Then we broke on the top side because the market is symmetrical. Then we came back inside the range. So we had a break on the bottom. We had a break on the top. Now we're back inside the range. So this is acting as support. That's why we had a green bar on Friday. And we could probably see another move higher. So we'll see what it does when it gets back to the EMA. I'm expecting this move up to fail, and then we could see another move down. But if it doesn't fail, we're probably going to hit the top side of the range at the 410 level. So I'm expecting a bounce here. Can we just gap down again and continue lower? It is a possibility, but I'm expecting some type of bounce. We are a little overextended from the EMA, so we could see a bounce up, maybe to the 404, 405 level. And I'm expecting the move higher to fail and send prices lower. If it doesn't, then we're probably just going to be retesting the highs of the range again at the 410 level. There was this uptrend previously in play. Prices broke outside of it. So this was the uptrend in play previously. And since we had a capitulation for the bulls, you can see this breakout right here was a climactic point. This can lead to a reversal. That's exactly what we got, and even mark a top. So maybe we don't even come back up to these highs because we already had a capitulation moment for the bulls. So we could see prices continuously rally downward. We do have this little skinny channel in play too, so a break outside of it can lead to a retest of these lows or even another leg down. So pretty much there's a lot of factors telling me that we could see a short-term bounce, but I mean everyone is probably expecting another move lower because of these bearish signs on the chart. So that's pretty much everything I have on the daily chart. We broke through the EMA previously, like right over here, but since this is a little bit higher and after two legs up, so let me show you guys that right now. This is one leg up. Prices were in the formation the second leg pretty much since December 22nd, and it failed to reach the measure move target at the 437 level. It could still reach it, but since we came up short by a large amount and we saw a big drop, this tells me that the bulls are weak because they cannot reach that second leg higher. So this will lead to a rally in the opposite direction, and that's what we're getting. So maybe we don't even get a bounce. We'll have to wait and see. But as right now, I'm expecting a short-term bounce to lead to more downside for the SPY. Now let's take a look at the weekly chart. And here we have the weekly chart for the SPY. And the chart is not looking good. Pretty much just going sideways for the most part. I believe that we're probably going to do something right over here. So if I zoom back on the chart in the history, from 2014 to about 2016 was a ranging year, or ranging couple of years. So you see this is acting as strong support at this 182, 183 level, and there was strong resistance right at this 213 level. So you can see how well this range is holding prices inside of it. And if I mark it with a horizontal, or excuse me, a vertical line, you can see that the range kind of started right over here and ended right about here. So that's a 2-year range period from Monday, or let's just say October 2014, prices going sideways, to about October 2016. So this was a 2-year range period. And then we rallied for about another 1.5 to 2 years before going inside another range. So this is a range right here. So you can see that prices broke the top side, led to a breakout on the bottom side before seeing the rally. And this is from, put a vertical line, this is about from February 2018 to about June 2020. So about 2 years. So it looks like the market does these 2-year rallies and 2-year ranging, about 2-year ranging periods. So from 2014 to 2016 was definitely a range. Prices were going sideways for the SPY. And then we had a expansion in the market. So this is contraction. We had an expansion. The market has different states. So previously we were in a trending state, then we went in a ranging state. From 2016 to 2018, that was definitely a trend. And then from about 2018 to 2020, give or take some months, it was pretty much sideways, because here this drop in 2020 brought prices back all the way down to 2017 levels. So this was a range. Then you see another massive expansion in the market. And now, what do you know? We're in another contraction in the market. So this looks like the macro structure in play, like I spoke about. That's on the daily chart. The macro structure has a downward bias to it, because this was a downtrend that led into it. So there's a good chance we probably see a breakout on the bottom side eventually. But as right now, maybe we do another 2-year contraction. So that's why I'm not really bullish on the SPY anymore, because it's taken a long time to get to those lower price targets. So this looks like it started back here in May of 2022. And let's mark May of 2024. Or let's just mark January right about here. So it doesn't have to be exactly 2 years. So about somewhere right over here. So we could just see some sideways price action until another expansion in the market. So that's something to keep an eye on, because we're just going sideways. If you look in the past, maybe it's easier to see on the monthly chart. You can see how we have these contractions and then expansion, and contraction, expansion, contractions, then expansion. So it takes a while to play out on the macro structures and the long-term cycles. So basically we could be in one of those. Now let's take a look back at the weekly chart. Basically, this trend line is going to be the one that will probably lead to that expansion, because that's what occurred back here in 2016. Prices bounced off of it. We bounced off of it in 2019, came back to retest it in 2020, led to that expansion. So it looks like prices are trying to come over here, either in the form of a sideways price action or legs down. Either ones are corrections. So pretty much we're just correcting after this really large move higher. And since we hit the top side, prices will work its way to the bottom side. So this is the macro structure. It's going to take a while to play out. Let's say if we get to the 323, 322 level tomorrow, then obviously it's going to shorten the time that's needed for that correction. So basically it's better just to see a fast crash down, just like here from February 2020 to March 2020 was a huge drop, and it already corrected, so we can just rally right away. Over here is taking its time, so it could be drawn out versus a big crash down, and then we could probably see the rally in the future. So let's take a look at the weekly chart price action. Once again, the more close-up viewpoint. So like I said before, this looks like the ranging pattern. That's why I'm expecting that bounce to fail, because we just hit the top side. It will send prices back to the bottom side. So that's what I'm looking for in the next coming weeks. I'm basically looking for lower price targets after maybe a short-term correction up. I'm looking for lower price targets, probably back to the 387 level, 382 level, and then maybe even 360s. We'll have to wait and see, but let's see if we even get that. The bounce should fail. Now, if it doesn't, then it's probably going to be retesting these highs at the 414, 415 level, and maybe even break outside of it to get that leg completion right around that 430s. But we'll have to wait and see. It's all about looking at what price wants to do and what it cannot pass through. And then you can say, hey, we can't probably break this level. We're probably gonna go retest the other one. So it's looking like it wants to retest, you know, the low 380s as of right now. So that's all I have for the SPY on the daily and weekly charts. Just want to give you guys a entire viewpoint of the SPY pretty much since 2008 and what it pretty much does. So that's all I have for the SPY this Sunday. See you guys next Sunday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time and bye.